Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar remains bearish as the bears continue to weigh their paws on the market and now takes out the level of 68.45. It is assessed that with that support broken and also beneath the 60-day moving average has exposed the next target of 67.70. With the technical implications and a trend that is coming back to play with the ADX to support the case to the downside. Looking ahead, we still have tomorrow the Australian Bureau of Statistics December employment release. It is expected a slightly weaker number of 11,200 compared to the previous number of around 39,000 in November. Most of those jobs in November was part-time of around 35,000. Still, from a technical point, I do anticipate the market could see a weaker number and therefore could put the February RBA rate decision for a cut. Still, the bears are still in place and still continuing on this trek as we now post an intraday low of 68.30. The pressure remains on the support at 110.80. I do anticipate that the dollar index will continue its trek up towards 97.60.70 and last posted at 97.37. This in turn should see the support at 110.80 crumble and then expose the region down towards 109.55 to 85. The dollar yen rejects the level of 110 overnight as safe haven demand returns. It was reported from the news that the Center of Disease Control said a traveler from China who arrived in Seattle was diagnosed with the first US case of coronavirus. If the outbreak does get worse, then no doubt safe haven demand will continue, as there's been following cases in Thailand, Japan and South Korea. So let's see if the market does resort back to safe haven demand. A break of 109.60 will give further indication down towards the 108 region. There is little to report on the pound. It trades sideways and no doubt is waiting for the Brexit result, which is at the end of the month. If the divorce continues in a Brixley fashion, and the fact is there's no hard landing or soft landing, but just a natural departure, then we could see this pattern continue on. However, if it does turn into an uncertainty to the Brexit, and with the Bank of England possibly cutting rates, soon could see further bias to the downside. Now, a break of 129.10 does expose the region down to 124. Well, unlucky for the bulls this time because they didn't strike gold, as you would say, on the challenge of 1,565. From the rejection, the market is now poised for a possible test down, but was limited on the sell-off due to the fact of the situation overnight of the news to the coronavirus. Anyway, looking at the technical indications, that is, the bears are still there. Let's see if the market can take the challenge back to 38. Although I am a little bit cautious because dips seem to be the way to play here. And therefore we could see another rebound of 38 and see a challenge back to 65. And then that could see another move up towards 71 with 1,600 still objective. Oil was broken down and back to challenging the support region, which is only about 100 points away at $57 a barrel. I do anticipate that my bulls are still there and could see a rebound and eventually look back from this support and up towards the region of around $61 to $62 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this new day.